Hello, Gold Investment Letter. This is Eric. About an hour before the closing bell on Thursday, October 12th, 2023, I wanted to make a few comments about the state of affairs in the precious metals, mining, commodities, base metals, battery metals, and all of those related equity markets, small and large, and the state of which has been downward for, well, over 3 years now. We've been in a bear market. And one of the things that I just wanted to put forth, it's good for me even to remind myself, uh, how is it that you actually get wealthy from investing, from capital markets, equity investing? How do you get rich? How did I get rich? I'm older now, but I've had to come from way behind the eight ball a couple of times in my adulthood, and I didn't come from any money or anybody in any realm of education when it came to investing. We never had any money to get past the month, so this has been a lifetime education that I enjoy. Even last night I found myself grabbing a book. I have so many different books that I haven't read laying around the house that I order and get ready to read, and then whether I get to them or not, we'll see. But it was there were like it was like 10 books sitting on the table that are on my read list, and I just was like, I grabbed a small book about the best traders, uh best stock traders of all time. And I was like, I just still gravitate toward this stuff, lessons from Jesse Livermore, Bernard Baruch, things like William O'Neill, who started Barron's. I remember when I was a young stockbroker, I used to absorb everything I could get from the guys that owned the firm that I worked for. It was a small boutique firm. It was the second firm that I worked for when I was 21 to 24 years old, building my client list, making hundreds of calls a day, but learning about the markets. The markets is what still keeps me passionate about all this today, is the challenge and the constant learning process, the constant check-in, with where am I at? What do I believe? Where's my head? What is the information that I'm being given? What signals do I get technically, fundamentally, psychologically, whatever it may be, emotionally, that are things that in the past, that if I did X, Y, and Z, were profitable for me? Which things are there that I'm doing now that pretty soon thereafter I had to go to the woodshed for a nice beating from Dr. Market? These are the things that I continue to love to examine. But I mentioned Bill O'Neill because one of my managers, had mentioned to me his theory, summed up, and I might even be butchering it a little bit, but I've always remembered this, which is his theory was, if a stock goes through $10, they typically keep going to at least, like, $13 or so, 13, $14. It may be that it goes from 12 to 15 or something like that, but it's a trade that I've done many times in my career based on that little tidbit from Bill O'Neill's theory, that when a stock on liquidity breaks through that psychological barrier of $10, it rarely stops right after that. It's got to get through 10. But say, for example, I don't know what if somebody's ran a fund based on Bill O'Neill's formula, where you end up buying on a breakout above $10 on volume at 10-20 on average, and sell it for 10 to 25% gains. How many times does that not work out, no matter what the company is, does, or what the market is doing? I'm not sure. I bring it up because these are all things that are tidbits that I've gathered over the course of my career, and it brings me back to a message today to you guys, that hopefully is helpful. The way that the richest people that I know of in my life, the most successful people, have gotten to be that way, and that's the only reason I think I'm really of any value, is that I've been able to have some very smart people that that I've been able to take tidbits from, and then obviously compiling my experiences where I try to just digest the nuggets as best I can, or use that information to give you ideas to invest in the mining space and things like that. But it's a very simple principle. Think about it. They buy cheap and sell dear. They buy shit cheap, whether it's real estate, equities, businesses. what's the best time to be a buyer? If you have cash during a time of duress, when other entities are in a state of pressure and duress, and they're willing to take something on an investment basis or on a buyout basis or a sale basis to get liquid that they normally would not. Okay, and this is something that like Warren Buffett's whole adage of buy when there's blood in the streets. Easy to say, how easy is it to do? Okay, how many people do it? What I do know, and I'm going to give you a screen share. I just want to look at a couple of charts, and then I'm just going to wrap this up. It'll be a quick video. Okay. But I think about um, here's the CDNX, and let's just go for one more chart here. Okay. I'll pull up GDX. It doesn't even matter. You can pull up any entity, even the S&P, but there's blood right here, guys. This was bloody murder just a few years ago. Remember that? Bloody murder, which was also the first time in my career that I prepared accordingly for a day in the future that I had socked away a certain amount of cash and income somewhere that I was not seeing it, was not touching it, for a rainy day when I had the pit in my stomach conviction that there's money laying on the ground. I just need to pick it up, despite all the fear and noise and the pit in my throat and stomach from my own account value that I had built up, just declining day after day and scary as can be. I bought this pullback. In fact, we at the Gold Investment Letter, the Monday of the bottom, it was a Monday. I know it. I just remember it. The 3X and 2X ETFs, levered ETFs, had blown up on a Friday. They flipped upside down. They were completely broken. And I said to myself, I was really starting to actually feel nerves for the first time in the market decline because of how severe it was. And when somebody who has an iceberg heart like me starts to feel that melting, it's actually a sign, if you could be aware of it, to take contrary action, not follow that instinct. And so I was able to pull, funds and actually pull the trigger on buys in my account. And I had come out on that Monday. Somebody could probably look the bottom SLV, go in your emails, SLV buy, SLV call options. You'll see it if you were here in, March of 2020. I put out a buy on that and also on the miners and things of that nature. But I called the bottom on the Monday morning, opened down, bought SLV call options. Those 10x by the end of the summer. But this was not an easy time. My point, not an easy time to be a buyer. This in here, this is what this feels like today to me. Late 2015, summer 2015, after a 4-year bear market when there were companies on the junior mining side of things trading for a song. I mean, literally, I had found, for example, I started taking the little cash that I had, buying up a company called Gungnir Resources at one half of 1 penny Canadian, between a half a penny and a penny. It's a big spread percentage wise. When you're trading that low, it had a $400,000 market cap, but they had some interesting assets in Sweden. They didn't have a lot of cash, but they were solvent. They weren't indebted. And I started to just nibble and buy at a half of a penny in this area. I shared that idea with some folks, and it started to get a little bit of traction. I think towards the end of the year, where it was like a penny to 2 pennies or something like that. Big percentage move. But anyway, anything you bought, it didn't matter if you were buying it here. If you stuck with things during this period and just chipped away, bought a little bit more instead of getting shaken out, frustrated, impatient. What happened in early 2016 was violent on the upside. 6 months, 7 months, where the GDXJ, which is an index that's not all that much of a junior index because most companies have $1 billion minimum market capitalization to be included in this, which is not junior to me. We have companies that we own that are sub $5 million market caps. And I actually have been buying many of those these recent months because the value that I'm seeing, the level of how bombed out their shareholder base is, the lack of buying interest, just the little consistent selling driving these things down. We also contend these days, folks, I never really get into conspiracy theories or manipulations in the market. Not something I really tend to focus on because we can't control it necessarily anyway. But the banks, the bots, the quants, the algos, the naked shorting that goes on in these little junior miners has actually been very surprising to me to see how much that this has been driven down by those programs in the sense of individual companies and just the trend following nature of those going short. And whether they're able to or they have to cover at some point. If they have to cover, I'm great with them dropping these companies down to ridiculously low prices to buy them. That will just fuel the rally on the upside. But the naked shorting, which with no accountability, is what's a problem. But that's what's happening even now in some of these names. But in any event, if you would have just stuck out that period of time when most people threw in the towel after 4 years, 2011, October, top of the gold and the miners market when I launched this newsletter, Gold Investment Letter, actually. So I dealt with a 4 year brutal bear trend to build up the Gold Investment Letter. And what happened here? Well, it tripled in the GDXJ, but many of the junior miners that we had been buying, I look at like Gungnir at that time. I don't know if it happened that quick. I think it happened a little bit later. That stock went to 40 cents, 80x on that stock that was bought. Many of the juniors that were sub like $50 million market cap, certainly 25 million, they were up Bravada Gold 4 cents to 40 cents. Southern Silver 5 cents to 60 cents, things like that happened in a very compact period of time. And we've seen this again then after the 2020 flush. The amount of money that we made on that bounce in a lot of names was incredible. Right now, where are we? Do we, look at the duration in time? I'm not doing this officially, but let's call it right at 16, right at 20, right at where would we go? It would be right at the beginning of 24. Could be that same stage of time where we see these extremes. On a general level, I'm not making that call, but I can tell you that here right now, the way that this market feels, the how bad it feels in the gold mining sector, in junior equities, gold, silver. Also, this deals with nickel, uh, copper, any metal or mineral that is on the lower end of the junior scale. It's the worst I've ever seen it. And so the reminder is that companies are in trouble. I'm not an exploiter. I like to help companies and businesses. I'm an entrepreneur myself. I invest in a lot of earlier stage venture capital tech companies. It's not with with like this, you know, shrewd, snaky interest that you're going to want to exploit people. It's not like we're doing things that are going to keep people in debt bondage over the course of their life or anything like that. But if you can buy assets vis-a-vis being a shareholder in a company that has been worked on for decades and built up and tens and hundreds of millions of dollars that have been spent and they're laying there on the floor. The CNX is a little bit more of this is the TSXV. This is a little bit better appetite for what's going on in that world with the juniors. And here, if you look at the daily chart, wow, that's really been knocked down. We're oversold. Looks like, okay, well, maybe we could be hitting a bottom soon. But then I look at the week to back it up. And since we just broke that low, I don't think that was, I think we have another week where we close below this level this week. And that is a confirmed breakdown. And I think it'll go lower before we hit a bottom. This includes other entities and sectors outside of the mining sector, but the TSXV is notoriously known most heartily as the main area of financing of small resource companies in the world. Look at the monthly. We've had this happen before, 15, briefly in 20. Not a lot, but these have happened where you've gone RSI below 30. We're at 33. I think we're going to get a flush there. And I hope, there's two different ways this may go. We could see the low if it kicks into gear in October here and maybe flushes below that 500 level. And that's an extension that could actually show that the RSI does go below 30. Maybe that could be it. I don't know. Or we might need to go retest down at like 400. To me, at this point, the lower the better. I don't care. I've got positions on that if you've got income and you have cash or one or the other, you are in a great position. If you're stuck and you're just trying to hold on to what you have, I've been there. It's tough. You know that there's value out there and you're licking your chops. In those cases, the only thing I can say is try to go find some money. I mean, fresh cash, however you can. I'm not talking about crazy leverage. Most people that are in a position where your back's against the wall and you're just trying to hold what you can and pay your bills, do what you got to do to hold what you have. That's the most important lesson, number one. But number two, some of you people have plenty of dough. It's just how much do you want to risk and where do you want to risk it, right? I mean, we all say that to ourselves. Gold, physical gold is the safest place for my money in the world that exists. And I've said this for years. Physical gold for a store of value, for safety, for purchasing power maintenance, it's gold. Physical gold. That's a different animal than these junior mining stocks, which have a lot of volatility, but they're also the ones that have made some of us very, very well off by taking big bets and having a bunch of losers, because that's the nature of venture capital investing, is that you are going to have some of those losers. But I look at some of these companies like, I mean, some favorites on the side of not being so small that are listed, New York Stock Exchange, or at least Amex, and the Toronto Stock Exchange. Like I look at I-80, which is a tremendously run company out of Nevada. Look at the lows that it's at. If this thing doesn't double from these prices, I don't care. If it goes lower, great. I'm accumulating it steadily and slowly, but eventually I think it goes way higher than the $3 US area. This is US pricing. But this is a time when you look at a company like this, and IAUX is I've got it right here. Let's see, fundamentals. Yeah. So we're, $500 million market cap. It's not tiny and it's not big. McEwen, Rob just was able yesterday. We saw more news, but this is another one that you actually, you look at that chart, it's a little bit rough. But I think this was the low in McEwen's history right there. And you pull up a weekly chart, it looks much more constructive. So I think McEwen is absolutely going a lot higher. In fact, when I look at a situation like McEwen Mining, I mean, just use common sense on valuations, right? So this thing's trading at a $347 million market cap. But you just saw they had a 42 billion Argentine peso investment. I think that's it's under 15 million US. I'll have to do the math, but it's more than 10. And then you had Newton, who's owned by Rio Tinto, put in another 10 million. And these terms are for McEwen Copper. And that's a wholly owned subsidiary. I invested it directly in McEwen Copper a couple of years ago. And, that was, I believe that was at a 300 or so million dollar valuation. I want to say somewhere in that ballpark, but it was $10 a share. The way that the last transaction, the value, which is approximately, it values fully diluted McEwen Copper at US 800 million. And so that's about $25 a share. Been a great investment on the McEwen Copper side. But McEwen Mining is not reflecting any value in the market for their entire freaking gold business. Do you understand? McEwen Mining owns 47.7% of what the biggest companies in the world, Stellantis for their actual product and their mines and their assets, Rio Tinto, have just put in a big chunk of money again, second time in less than a year, that they've chopped up and acquired a bigger piece of McEwen Copper. If it's worth 800 million and they own half, let's call it a little less than half. That's 400, let's call it 350 million. It's a little bit more than that. So that's McEwen Copper. That's the value of the McEwen Copper holding of McEwen Mining. That's where the stock is being valued at. Go take a look at McEwen Mining or McEwenmining.com and look at their actual business. They produce, over 100,000 ounces of gold a year from several mines. Their assets that they have on some of the projects, like even even Nevada projects that McEwen has interest in that nobody even talks about, that are like in Rob's, closet, probably, that McEwen Mining holds. these are worth a tremendous amount of money. The assets on the producing, mines that are there, what's it worth? I guess I'll tell you something. It's worth a lot more than zero. So this is where you get stupid things, stupid valuations that are going on in the market. And in my experience, here's my biggest message today: exploit the situation for your own benefit. And that means that there's one simple way to do it. You go on your computer and you press a buy button and buy whatever the frick you want in gold, silver, copper, nickel. Go up in the space. I don't waste my time on blue chips like Barrick or Newmont or whatever. I'm looking for bigger returns. I enjoy making 10 to 20 times my money in miners for all the fuss of dealing with some of them that just go in the toilet. That's my model. I go very low, but I also, I have McEwen Mining's my third. Well, if you take McEwen Copper into the case, yeah, it's my second biggest position, and it's been that way for a while. Except for Giga went ahead of it for a little bit. I think it's below it. Phenom Resources is my biggest position. These are huge positions for me, and I don't change them. I'm waiting. We're in a terrible market environment, and we will get value out of these assets because look what's coming ahead, guys. We can get distracted by Hamas and Israel and Ukraine and all this shit going on in the world that we can't control. Get afraid about what's going to happen next in the capital markets, the Fed keeping rates higher until more banks blow up. All this stuff is true, and it's all happening, and it's all a distraction to the fact that if I keep my eye on the ball and I buy things where I know that they're going to end up being revalued to a more fair level, much less the fact that usually after you expunge these cyclical industries and you have all this transition with energy, the battery metals coming up and supply gluts that are, really going to be difficult to make up a gap on. It's going to lead to higher prices in the metals. We also have the inflation issue, which is debasement of currencies, fiat currencies around the world. These things are where you want to own pieces of hard assets, commodities, precious metals. So there's ways to do that. You own your own gold, you own your own silver, but I like to own it in the ground as well. And when I have like stuff like, we've pointed out Carlisle Commodities, who's a sponsor of the letter, just so you know. But like this deal, ridiculous, like what they have. They have, I'm not going to get into the pitch, but type of situation, you just don't find these opportunities when the market's hot. McEwen on the next upward cycle after how bad this has been, particularly really since 2011. We've had a couple of upward trajectories, but when we get into a real bull market in metals and natural resources and minerals and the equities they're in, I believe the next bull market in this space is going to be the biggest we've ever seen because of the circumstances and everything all together. You can call me crazy. Nobody's really thinking that way right now. That's what I feel in my gut. I don't even care if that happens. Any bull market, which usually comes right after one thing we're in, which is called the bear market, and then a bull market, and then a bear market, and then a bull market, remember? So, when a bull market comes, I don't even care if it's weak. From the levels that we're at with some of these, especially the juniors, but even many of these companies, they're so undervalued and so underpriced. I would just encourage you guys, don't get disheartened. If you liked a company 2 years ago that's come and it's a lot cheaper and you're still holding it and going, I still have some, buy more. You're not going to take advantage of the circumstances unless you cough up some more cash. Get off your ass. Don't be a wussy. Quit looking at all the problems and put yourself in a position to get rich when things turn around instead of whining about one stock down here or there and worrying if you're going to get bombed by Hamas tomorrow. Okay. Like, just seriously, these are the type of things that distract us with fear. And I'm not afraid, and I'm not afraid to buy into this sector. I'm more bullish than I've ever been in my life. I am not predicting that we're going to turn around like that. And I would be stupid to. I don't know the timing. I just know that I'm right. I don't know when, but I know I'm going to be right. And that conviction runs very deep. I also, if I didn't have that conviction running very deep, I wouldn't have made this video. So I hope for some of you, some of this being pointed out helps you realize that, you don't go all in now or whatever else, but like being a bull when everybody's a bear and knowing this industry, not quite inside and out, but inside and out. I started talking to CEOs of some of the smaller companies that are, in Nevada and here and there and have good assets, looking at their balance sheet that are struggling to just pay their bills and keep their lights on. Trust me when I tell you, you want to be buyers and you want to be deploying capital. There will come a day in the gold investment letter where I will be doing a similar video and I will be telling you to take money off the table and raise cash because things are getting too expensive. That we are very far from. Have a great day, guys. Cheers.